welcome back to another lesson. So today's lesson is going to be quite a basic one. This is going to be, adding a refinement of sorts to your trading and your setups. And it's more about identification and finding confluence in understanding your bias, rather than a whole new concept today. So today we're going to be talking about something called order flow. Now, with order flow, we've actually touched on this, throughout the whole mentorship, but I just haven't explicitly explained that, this is order flow and, this is what's happening. And in a second, when we do jump on the charts, you guys will see what I'm on about. So what is order flow, right? So order flow, understanding order flow requires some sort of bias, a directional bias, an understanding of what price is doing, where it's heading, where it's growing to. And actual, the answer to your question is when price respects arrays. When price is respecting these order blocks, these fair value gaps, mitigation blocks, and so forth. And why have I written left to right? So this is a very, very basic point, but extremely important. And what I mean by that is when we look at price, when we read it, especially on a higher time frame, and on a low time frame too, of course, you have to read price from the left. You need to know what happened and what price done, what the order flow is telling you, right? How can we use order flow? So the biggest one really, prevent getting caught offside. Like I said, it's a confluence. It will add, a sense of confidence to your setups, your trades, building a bias. And in terms of actual application, we can use order flow to be more confident when we're spotting reversals intraday, especially, when you combine it with other things like time, kill zones, and whatever. And of course, continuation trades, you can be confident in a trend and get in line with a trend if you know where price is drawing to. So let's hop on the charts. Okay, so this is the EURUSD chart, right? Now, I use this chart for a lot of examples because I find this price action very nice. It's very clean, right? Now, the first key sign, of course, we have a downtrend. We have a very, very clear trend here, which is, very nice. That is what we like to see. Now, in this trend, right, in a downtrend, bearish trend, what do we have? We constantly make new lows, retrace new low, so forth, right? Of course, that's the basics. But more so than that, where are these highs and lows, being placed? Specifically the highs. Where are these swing points being made? Cool. So let's say we have a high to low, we can even consider it from up here. So let's consider it from here to there. We can consider our swing point from here. Now, I always mention this, right? When we're shorting, we want to pay attention to the first premium array. What is the first premium array here? These candles, right? The up close candles, correct? They form a singular order block. Price trades into them. We have a reaction, and then we have, the move away. We create a new low. Cool. Now, after this, we form a new low after sweeping the liquidity of the previous low. Now, over here, we don't actually get a great, something that's too obvious, we could say, because we'd expect price to run a bit higher, potentially into the mitigation block, into these two up close candles, the order block, and then start heading lower. However, it doesn't do that. So let's look at the following swing points. So if we consider this as the new high, we'll consider this as the new low, right? And if I line this up here, you guys can see these two up close candles, order block, right? Price trades into them. Of course, we have that reaction away. And of course, we have the move down. Cool. Now from here to here, I wouldn't really consider a swing point on the daily. However, on the 4 hour, this may have been a very clear swing point. So if we just consider this for a second, we can see, you know, price trades up higher. We go into these fair value gaps. Then, of course, we trade lower. Then another one, you can go ahead and do from here to this low. Very nice. And you can see we close this fair value gap. I'll you know, this isn't something I've explicitly taught you guys, but if you pay attention to this, right, with this fair value gap, we can consider this fully filled. Right, that wick to here, we basically filled in the whole fair value gap, and we've had a move away. First premium array, right? And so forth. You know, we can repeat this. You know, we might as well do it while I had the last one. So we have from this swing high to this low, and we can see price trades up into these two up close candles. You know, we consider a daily order block. We actually push past them just very, very slightly into this daily fair value gap. And of course, we have a move down. Cool. So now looking at our current range, right? This is the thing I meant about left to right. I've now sat here and mapped out the price action all the way from up here to down here, our current range, right? And what have I shown you guys? I paid attention to the swing highs in specific, right? The lower highs. And I showed you, you know, this is where they reacted. Therefore, a swing high was formed and then price moved lower. New range is created. We retrace. New swing high, move lower, retrace. You know, it's the same thing again and again. So now, right, over here, we have a range from here to here. This is our current range. Right, on the daily, especially, this is what we're considering. We're considering from here all the way down to this low. Now, the first thing that I want to touch on, right, in this range, we're essentially consolidating. We haven't taken the high, we haven't taken the low. You know, we're just playing about in the middle. We've had a move into premium, into discount, into premium, into discount, right? Now, if I'm being honest, you know, just leave this. I'm looking for a move to the downside now. Like finally, initially I anticipate the move here. You know, when we created this low, I thought price will keep moving low. Personally, of course, I was wrong. Now the thing is, I want to see, you know, price start to take these lows and of course head down here. But you know, when price comes from here to here, is that a daily, you know, market structure shift? Because that's what a lot of people think. That is not a market structure shift. We are in a bearish range from this high to this low. I've mentioned this a lot of times. From this high to this low, if this is our current range, while we're inside it, there is no, you know, breaker structure. There is no market structure shift. On a lower time frame, yes, there is, right? But these swing points we're creating, they're not essentially part of our larger overall trend. You know, this high might be, you know, if we've now put this high in, we've come into this daily order block, right? And we now go ahead and make a low here, right? What can we do? We can go from that high to this new low that we might create, you know, if we're saying theoretically, and then, you know, plan out a new range, high to low, retrace, blah, blah, same old. But we wouldn't really care about, you know, these highs and lows in the middle. They wouldn't be as relevant. So, just a second. Okay, so the thing here is I see a lot of people get confused about this, you know, and the main thing that I'm trying to show you guys here is you need to know what your local range is, and the only way to do that is to establish order flow, understand your order flow. Okay, cool, you know it's a bearish trend, but where are your swing points made? What did price react to create that swing point? That will let you know, in a way, where your valid swing points are and you want to use them. How do you know that this is, your high, right? This one over here. Of course, I'm showing you guys it's the high, but why is it the high? We came up here, right? We had this range from this high to low. We came to the premium of this range. We reacted to an order block. We then had a move away, creating a breaker structure when we took this low, right? So we have a break structure, and then of course we form a new low, and now we have a new range. So this is our current range. So in this range, there's two options. Price will either come up here, take this high, which would deem a market structure shift, or price will come down here and take this low, which will deem a breaker structure, which will be continuation. So now I think it's going to be a continuation scenario for, EURUSD in specific, based on a lot of different reasons that, we cover in the, the weekly outlook. So now let's come on a lower time frame, right? That's a higher time frame. That's going to help you with your understanding of bias. Now let's consider this on a much smaller time frame. Okay. Had a lot of messy PA, so I'm going to try and find a data that is a little bit, cleaner, a bit easier to understand. What day is this? Okay, cool. Let's try and use this day now. Cool. Now coming into this day, right? If you have a bearish bias, you're in line with price already. That's nice, So how can we determine order flow, right? You need some sort of basis. You need to have, your bias in a way. You don't need a bias. You can purely just read it from price. But what I'm saying is, if you have a bias, it's easier to apply order flow. And what I mean by apply is, right, if you're bearish, you want to mark out your bearish arrays. Like, let's say from here, right? We have that London to New York OTE. Let's say we run it from here. Now, which arrays would you mark out? You can mark out this. Inside here, there's probably a lower time frame order block. Could have marked out these order blocks, all these up close candles. And some people are probably wondering why didn't I use this high and then this low as my range? The reason I'm not using that is this scenario can very easily be a turtle soup scenario. Now, the difference in pips from here to here is about 6 pips, right? If I have to add 6 pips to my stop loss, that's not the end of the world. You'd rather be safe than sorry, because now if we look at this, what did price do? Price actually took this high and it traded into this small fair value gap. And of course, we displaced lower. Now, I understand why somebody would put the high there, but these are things you have to be aware of, especially considering there was news on the Monday. When there is news, you need to be aware. Price will run a high or a low to fund a move in the opposite direction. Make sure you write that. During, or before news happens, we will have a run or a run on a high or a low to fund the move in the opposite direction. This was covered in the lesson on, offset accumulation and distribution basics. Cool. So, of course, after that happens, right, we have a bit of offset distribution. Pay attention to this whole thing here, this downtrend. Price, of course, doesn't offer, I wouldn't say it offers you great entries a lot of the times, but in between there are, for example, the swing point that really catches my eye here offers a very clear trade idea. And of course, this high to this low here, we get a move to the premium. We trade into this, order block. Of course, it trades into the wick, but we can consider it. Then from this high to this low, we get another move, and price, of course, trades into this small fair value gap. I'd personally expect it to reach that order block, but it doesn't. And then, of course, if we draw it from this swing point, we don't get a move into the premium. Then, of course, we can consider this new swing. We actually get a move into very deep premium. Would have been a bit scary if you were actually in this trade. But, of course, we get that displacement away. We consider this high to this low. Get a move into this order block, right? So my job here isn't to, just sit and draw OTEs for you guys to understand. But what I'm trying to show you, right, this was very clearly a bearish day. Now, you can establish that from a lot of different things. First thing, right, that stands out to me, of course, Asia range. We have this run up. We actually take buy side liquidity. We actually filled in this gap that was created, and we have this run lower. So when we have this run lower, we're actually seeing displacement during London kill zone, right? Fair enough. Then news, right, comes around. Price runs a high and displaces lower. So at this point, New York kill zone has opened. There's not been, very clear trade entries given throughout the day. Of course, there's not many ways to get in line here. This is the only, plausible trade during London kill zone, from this high to this low, retrace, and of course move lower. And then of course we run a high to fund the move downwards, of course. And that is also another confluence. So now that you're definitely bearish, how do you go about this? The same way I've done it on the daily. You start seeing price form these ranges, high to low, retrace to the premium. High to low, retrace to the premium. High to low, retrace to a premium. High to low, retrace. This one probably didn't come premium, eyeballing it. High to low, you actually get a premium retrace. High to low, you get a premium retrace. Here we covered it. High to low, no premium. High to low. Do you understand what I'm saying? So now that you have your bias, you wait for these ranges to form. You can look at these ranges on the 5 minute. You can look at them on the 3 minute. You can look at on the 15 minute. Price is fractal, because I showed you first on a daily. Now I'm showing you intraday, right? Let me try and find the same day. I believe it's this day. Yes, it is. And of course, you see these ranges form. And of course, on the 3 minute, this is actually, a little bit cleaner. There's of course the same swing points I was drawing. You guys can see a bit clearly now. If you've got this high to low, you see price trade into this order block perfectly. These 3 up candles are one order block. Look how perfectly price trades in. This is order flow. Price is clearly bearish. We are respecting bearish arrays, forming swing points at or within them, and then moving lower repeatedly, right? This is the sort of stuff you want to get in line with. So that is quite a basic lesson for today. But I do hope it brings some sort of clarity into reading PA. I know it's not massive, but when you combine this with a lot of other things, it should make reading price action a lot simpler. If you're not seeing, bearish arrays getting respected, and you're not sure whether you're in a downtrend, then, you wait. You wait for price to start respecting them and see that, we wait to see that order flow. You might see people refer to it as institutional order flow. And the reason they say that, of course, they believe institutions place orders within order blocks, as they're called. So, whatever. But we've already discussed that side of the theory. We wait for the order flow. The order flow acts as a confluence and a confirmation. That is it for today's lesson. Any questions at all, you guys can hit me up, and I'll be back soon with the next lesson.